Hello and welcome. You're tuned into CNBC-TV18 and we are getting Reliance's numbers. They are flashing for you at the bottom of your screen. The first tick, that is the profit. It has come in at 18,165 crore rupees. This compares with 26,994 crore rupees on a quarter-on-quarter basis. And if we look at the YOY number, the profit last year was 16,563 crore rupees. But do remember, on a quarter-on-quarter basis, it is looking lower because there was an element of Asian Paints stake sale in the quarter gone by, to the tune of 8,924 crore rupees. So adjusting of that, if we look at the numbers, it is an uptick, or I would say a flattish number on a quarter-on-quarter basis, but higher on a YOY basis. We'll be getting the other numbers as well. Cons revenue have come in at 2.55 lakh crore rupees, which compares with 2.44 lakh crore rupees on a quarter-on-quarter basis. This is largely in line with estimates as well. So this number is higher both on a quarter-on-quarter and on a YOY basis. The EBITDA number, that is the important number to watch out for. The cons EBITDA margin has come in at 18% versus 16.9% on a YOY basis. So this is a number which is higher than what the street was working with, because the operating profit margin poll suggested a number of 17.7%. Here, the number has come in at 18%, which is higher. And if we look at the EBITDA number as well, that should flash for you. It was at 45,885 crore rupees. This is higher than estimates. It has come in at 44. It compares with 44,511 crore rupees. So this number too has come in as a beat on all parameters. So it's a top-down beat as far as the consolidated picture is concerned. Now we'll have to look at the internals, because that would suggest where this beat has come in from. It was expected to come from oil to chemicals business and the retail business. So before I talk about oil to chemicals, Mangalam, tell us about retail business. How did it look this time around?
For so many quarters, the way retail has been beating street expectations, and it's not a small base. You're looking at almost 86,250 crores per quarter as a revenue, and that was the analyst estimate on Reliance Retail. Guess what the company's reported? 90,544 crores. This at a time when, the early onset of festive season, the uptick in consumer sentiment is likely to play out, and that's exactly has played out. And analyst estimates on retail revenue growth were between 13 to 15%. Even the most optimistic estimate was close to 16%. The company's reported an 18.5% growth in their retail revenue. So per quarter, on a quarterly basis, they've done nearly 90,544 crores. About 4 years ago, their annual revenue was 90,000 crores. So that's the kind of growth that we've seen here. And all of this has come at the at the time where they've calibrated some of their stores. Operational matrices have improved as well. So the EBITDA growth has come in at 16% here too. The analyst expectations were that of 14 to 15%. So both on the revenue front as well as the EBITDA front, Reliance Retail has definitely topped analyst expectations. And on just the back of this, we would see some, uptick on the stock, largely because retail is the valuation driver by the company. What we also understand from the internal details right now, grocery and fashion lifestyle, that has grown between 23 and 22% respectively. That's the fastest that we've seen. DMart, for instance, showed about 15.5% sort of growth. So that's a positive. And there was a favorable mix and improvement in store operating metrics. And they've added a fair number of stores right now. The retail store count is just shy of 20,000, stands at 19,821, which is a whopping 77.8 million square feet in terms of total operated retail area. So definitely retail business is the one which has topped estimates of a good performance.
That's the same case for oil to chemicals business as well. By the way, on the consolidated numbers, it's a 6-quarter high EBITDA, the consolidated numbers that I'm talking about. So big beat coming in there. Retail, one of the reasons why we've seen that. The other reason definitely is oil to chemicals business, because this time the EBITDA has grown by 21% on a YOY basis and 3% on a sequential basis. This is a good number as far as the oil to chemicals segment is concerned. Product cracks, they are up anywhere between 22 to 37% this time around, which has led to this growth. Polymer margins are up 5 to 8%, which has aided performance this time. And if we talk about the polyester chain delta, that has been lower, but that was something which was expected. They've added 236 outlets in GOBP, and it has taken the total number to 2,057 in terms of outlets. In fact, let's get in some expert opinion coming in. Naveen Kulkarni, Chief Investment Officer at Axis Securities, is joining us now. Naveen, good evening. Thank you so much for joining in. What do you make of the numbers? Consolidated numbers beat. Even retail and oil to chemicals business have contributed significantly this time.
Yeah, so clearly the numbers are a beat on our expectations. So If I were to look at the O2C business, we were expecting an EBITDA of around 15,000 crores, so that's come in line with expectation. But again, this is a very, very healthy number considering we've seen a 20% YOY growth and plus, let's say, around 4 to 5%, 4% around the QOQ growth. Important thing is the retail numbers. Retail, we were expecting around 6,500, 6,600 crores EBITDA. So that's come at around 6,800 crores. So that's clearly a beat of almost around 4 to 5%. So that's a good number to be looking at. The digital services, we are expecting around 19,000 crores. So that's in line with our expectations, 18,888. So that's not materially different. So overall, I would say that these numbers look quite good to me at this juncture. We'll, of course, have to look at the internals, like what is the ARPU for the telecom business, store-level profitability, so on and so forth. But overall, these numbers said to be a reasonable beat on the expectations.
Let's talk about the auto chemicals business as well, because here the EBITDA has come in at 5,000 crore rupees, which compares with 4,900 crore rupees. So, of course, it's flattish on a quarter-on-quarter basis, but the expectation was that there'll be a decline. So, that decline, of course, has been arrested. This is something that we were seeing in last couple of quarters. So, the trajectory from here on will be very important to track because volumes, they were higher, but pricing was under pressure. So, that continued to be an issue with the oil and gas business, but that seems to have been arrested this time around. In fact, Gurmeet Chadda is joining us now with his opinion on and expert advice on the earnings as well. Gurmeet, what did you make of the numbers?
Hi, good evening. I think from the first cut, numbers look impressive. I think pretty good to see that even the margins have gone up by more than 100 basis points. EBITDA for the company is almost 40,000 crores. And as you rightly said, even the petrochemical business, which has been a little soft for a couple of quarters, seems to have done well. I would obviously want to see more details on new age businesses, which is Jio and retail. And Reliance is a bellwether company. So between Reliance, HDFC and ICICI, we have 25% nifty weight in terms of earnings coming in. So numbers coming good are extremely important. So it looks a beat, while the comparison may look a little flawed last year due to the windfall gains which have happened due to the refining. But if you compare and remove that one off, I think the numbers are looking pretty good. Sequential improvement as well as margin improvement.
The stock is about 8 to 10% away from its all-time high. And if that stock were to move higher on these numbers, then it would take the Nifty higher as well. The Nifty hit a fresh 52-week high in today's trading session itself, whereas Reliance, its largest component, is about 8 to 10% away from its 52-week high. Just a word on the retail business once again, at 90,544 crores is the highest ever quarterly revenue that the company has reported in the retail business. The last time they crossed that 90,000 crore mark in terms of retail revenue was in the third quarter of FY25, which was the festive season quarter. And now, as you can see the trend, it's inched higher. And more importantly, the third quarter of this year, which the quarter which we're currently in, looks even stronger on account of two counts. One, there is the GST rate cut which has happened, and as a result of which the sentiment booster would come in. And secondly, in this quarter, in the month of October itself, we have both Dussehra as well as Diwali. So the festive season cheer will continue. And my sense is that maybe, just maybe, in the third quarter itself, the magical number of 1 lakh crore in terms of revenue for the retail business per quarter would be, breached. And that's something we'll most definitely keep an eye out on. Will be a milestone. A couple of years ago, remember, Mukesh Ambani had said that they want Reliance Retail to be among the top 10 retailers of the world. And this would be a step in that direction. Devin Choksi, the MD of DR Choksi Finserv, also with us. Devin, strong numbers coming in, both oil to chemicals as well as the retail business.
Yes, absolutely. And at the first glance, I think must say that the recovery in O2C business has definitely played a role, because up till last quarter, due to the volatility, I think the subdued performance was there also on the margin front in O2C, which possibly I think was expected this quarter, that I think it will show the recovery in a better mode. So that is where probably I think one is feeling confident. More importantly, as you were saying about the retail, I believe that I think these two consumer-facing businesses, the Jio platform and the retail business, they are likely to show distinctly higher performance in the third quarter as well as I think in the fourth quarter of the financial year. From whatever numbers I just now at a glance, I feel that likely to see significantly larger amount of performance in both these verticals.
So some commentary coming in from the management as well. They say fuel margins have recovered over previous years, led by middle distillate cracks, and this is something that we saw in the numbers as well. However, downstream chemicals continue to be impacted by overcapacity, and they say corrective steps by the industry stakeholders will help balance global downstream markets in the medium term. So that is something which will be very important to track as well. Additionally, they say they're happy with the progress they're making in their new growth engines, new energy, media, and consumer brands. Devin, so far we have not been accounting for the additional SOTP that will come in from the new energy business. A lot of it will come on stream in 2025 itself. They spoke about the entire solar value chain, battery chemicals, that gigafactory in Jamnagar. Once it does come on stream, what kind of additional SOTP or valuation do you ascribe to that business?
Generally, what one sees is, against the capex in this kind of businesses, in the following 2 years, that is in 8 quarters, after this capex program gets over in this new business, that is renewable segment, you could possibly experience the top line of some around 1,25,000 to 1,50,000 crores. And going forward, the margins would be significantly higher. Difficult to pinpoint the number at this point of time because we don't have full clarity about which product stream is going live. But on a thumb rule basis, if I have to see, this could be somewhere in the vicinity of around 35 to 40% as margin because they are capturing the full value chain. So you are talking about 50,000-60,000 crore worth of EBITDA contribution eventually, maybe 8 quarters down the line. That's what our thumb rule calculation says. At this point of time, we can only add that much since we don't have the program in place as to which product line is going to go first and otherwise.
Okay, on Reliance Jio, that's the telecom business. We don't have the revenue and the EBITDA picture. What they have disclosed is the digital service, which includes the entire wider ecosystem. So that's like, Jio Savan, the TV, etc., all those businesses. We look at Jio, the pure Jio services, which is basically a telecom connectivity on your phone, your broadband services, etc. Now, there are two metrics that are known right now. One is subscriber addition. It's come in at 506.4 million, an increase of 8.3 million on a quarter-on-quarter basis, and about 27 million on a year-on-year basis, largely in line with expectations. Remember, Mukesh Ambani at the AGM had spoken about how the subscriber base had crossed 500 million, as they spoke, and in this quarter at 506.4 million, in line with expectations. The average revenue per user too has inched up by 1.2% to 211.4, bang in line with expectations. Remember, the ARPU for the company has only been inching up, bit by bit, 1.5%, because there hasn't been a broad tariff increase. What you are seeing is just people moving to a higher value plan, some migration, premiumization, that's been helping because the entry-level plans have also been increased or, they've been abolished. So these are the two numbers, subscriber and ARPU. Reliance Jio subscribers crossed 500 million for the first time. They've come in at 506.4 million, in line with expectations, and ARPUs have gone up by 1.2%. The big trigger for Reliance Jio will be the IPO. Remember, in the AGM, they spoke about the IPO plan for the first half of 2026. And the question is, before the IPO, will we see one round of tariff increase? The last tariff increase happened in July of last year. So already about 15 months have passed. And there is a case to be made because, 15 months have passed. And plus, it would add to the profitability metrics. Any tariff increase is a direct pass-through, almost 90% of it flows through into the ARPUs and the profitability. So therefore, the street believes that there is a case for a tariff increase either towards the end of the year or early next year.
I'm looking at the retail business once again, and now that we have a little more detail, what's impressive is the scale of operating rationalization that they've done. They've been speaking about recalibrating some of their stores, which is reflecting in their margins, etc. as well. The EBITDA growth of 16%. Between last year and now, the overall store, the store area under retail has come down by 2%. So from 79.4 million square feet, it's come down to about 77.8 million square feet. The same period, the revenues actually increased by 18.6%. So what this basically means is revenue per square feet, which is an important metric for all the retail companies to track, their operating performance has increased by 21%. And that's the highest that we've seen across all the retail companies that have reported their numbers so far, including the likes of some of these value fashion retailers, value retailers, and the likes of DMart, etc. as well. So 21.1% growth in retail revenue per square foot only talks about the operating performance that the company has, reported. And alongside that as well, if you look at some of the premium foods as well, that has seen a 35% like-for-like growth. So if you look at any of those, premium formats, which includes the likes of Fresh Pick, etc., where they sell gourmet products, that's seen a 35% like-for-like growth. Large store formats have seen a 19% growth. Staples and HPC, or home and personal care, grew around 35 and 25% respectively. And we also saw packaged food grow by around 20%. JioMart, which has to, play in the quick commerce place, has operations extending across 5,000 pin codes in over 3,000 stores. How many stores does Blinkit have? 2,100 is their target for December. So obviously, they are scaling up their quick commerce business extremely fast as well. That's seen a 42% jump in deliveries and 200% jump year on year in average daily orders as well. And finally, just looking at the consumer business out there as well, there has been a big jump, almost an 18% jump in consumer electronics.
All right, so that's about the retail business. For the oil and gas business, coming back to it again, it's a smaller part compared to the other businesses, but this has seen a big turnaround in the last couple of quarters. That did see a decline in last 2 quarters because of lower volumes. This time again, the KG D6 volumes were lower, 8% lower on a YY basis, but the pricing was higher. The company says this is something which would not continue going forward. So watch out for oil and gas business as well, and auto chemicals business, of course, the big earnings driver this time around. Let's get back to Naveen. Naveen, what's your take on the stock overall? It's valued at around 21.7 times FY27 earnings. Hasn't done much in last 1 year. Do you think it is waiting for more triggers to move higher? This is a performance which would lead to the up move that some of the investors are waiting for?
Yeah, so there is a possibility, right? So, see, if you look at the overall SOTP valuation for Reliance Industries, the O2C business is, let's say, valued at around 300 rupees. We have the retail business, which is valued at around 600 rupees. Geo platforms is, let's say, 550, and the other businesses, let's say, would be around 150, 200. So that will take up the valuation overall to closer to around 1,600 rupees, right? That's what most of the analysts are looking at, and that's been stable for a while now. The thing is that now we are reaching closer to the aspects where the O2C business has started to move up again. The retail business is starting to deliver a little better performance in terms of expectations. The growth has started to pick up. Last year was a little sluggish. And lastly, we are closer to a tariff hike. So the chances that in the next 12 months, Reliance Industries delivering a return of around 15 to 20% can be possible, in my opinion. So that's what how I will look at it, because most of the triggers that we were expecting are now closer to fruition.
Okay. Devin, what's your take on the stock?
Yes, I think the opportunity-wise, if you look at it, 1, 2, 3 points. I think first point here would be the Geo platform and digital services basically delivering the better performance because of the little improvement in the ARPU, of course, but at the same time, the value-added package in form of the enterprise as well as the home to fiber connections, I think, which is increasing. So that is where probably I think the Geo platform could show better performance. I wouldn't be surprised by the end of the financial year, that is in the fourth quarter, the current ARPU of 211 moves to somewhere in the close vicinity of around 220. So that would be, I think, the first key takeaway that one could see. Second is in the FMCG business, particularly in the retail segment, where their margins seems to be, I think, on a better side, and that's what is getting also reflected into the performance in the margin. So that, again, I think is likely to be a good catalyst because I think their growth is higher. And the third, there could be a tailwind, which would be, I think, your renewable segment. As the progress starts happening for implementation, though in the first phase, I think they are going to be consuming majority of the power that they'll be producing for the captive use. But I would still think that I think that would be the tailwind, and that's where probably I think one could see the higher growth. Having seen the stock not performing, reasonably good chances of, I think, 15 to 20% kind of an upside in the stock price from current levels.
15 to 20% upside, that would take it back to its all-time highs once again. Devin, thanks a lot for that. We also have Gurmeet. Gurmeet, Monday, what happens to the stock?
I think should react positively, but difficult to say in markets like this, Mangalam. But as Devin said, near-term trigger is Jio platform listing. India is one unique market where we spend 5 lakh crores on mobile hardware, mobile phones, etc. And services and data services, it's just 2.5 lakh crores. So it's a unique market in the world. We can buy an iPhone for 1 lakh rupees, but are very sensitive about paying 500 rupees, So I think that will change. ARPU will go up, digital services up, value chain will happen. Also, I think retail is due for a big turnaround. This business eventually also will get monetized and see the valuations other retail businesses get. You made a fantastic point on the revenue per square feet. Now, even Avenue Supermart is at 35,000. So this is becoming very competitive now. And third, I think even on the new energy business, Mangalam, which is again more medium term, is they're moving into BESS, which is battery energy and storage system. That TAM is also more than $20 billion. And if they start moving all the power consumption captive to, let's say, renewable, that would also entail significant savings. That can add 4, 5, 6,000 crores to the bottom line. So I think multiple triggers in place, some near term and some medium term. And I think Reliance has this typical trend of consolidating and then giving returns in a lumpy way and then again consolidating. I hope that the consolidation period is over.
Okay, well, that is something the investors in the stock would be expecting that as well. Gentlemen, thank you so much for joining us today this evening with your insights on what Reliance's numbers look like and the outlook going forward as well. I wish you all a very happy Diwali and season's greetings as well. All right, we'll wrap on the show with the synopsis of the numbers. Reliance reported good set of numbers. It was led by their auto chemicals and retail business. Overall revenues have come in at 2.55 lakh crore rupees. Consolidated EBITDA is at a 6-quarter high of 45,885 crore rupees. Margins at 18% are in line with estimates. Net profit has come in at 18,165 crore rupees, which is higher on a YY basis, lower sequentially because in the quarter gone by there was an element of stake sale in Asian Paints that accounted to other income of 8,900 crore rupees. Auto chemicals business, EBITDA is higher. So is the retail business, which has done well this quarter. With that, we'll take your leave, but stay tuned to CNBC TV 18 for more news and updates.